Michael, welcome to Real Vision.
Thanks, Ash, for having me.
It's a pleasure to have you here today. Of course, you're CEO and co-founder of Fireblocks. We're going to have a detailed conversation about cybersecurity, about the digital asset space, about the specific needs for cybersecurity in the digital asset space. But first, tell us a little bit about your background. I know you were with the Israeli Cyber Command for many years. Tell us a little bit about your background and how you got into the digital asset aspect of cybersecurity.
Sure. So, as you mentioned, I've been in the cybersecurity space for quite a while, about, I guess, 2 decades at this point. In like 2001, I basically was recruited to the Israeli army as part of my mandatory duty there, and served in the Israeli Cyber Command, basically in the unit that is corresponding to the American NSA. Done my service there for about 4 years, and then continued to work in a few companies that were mostly also on the government side, essentially dealing with cybersecurity. And then in 2011, started my previous company that was focused on mobile security for enterprise clients, basically helping people to adopt iPhones and Android devices in the workspace. That was our previous venture. We were running it for about 3 years, and then we got acquired by a company called Checkpoint. Checkpoint is one of the global leaders in cybersecurity. They invented the firewall back in the 90s, so they had a pretty good run on the back of people connecting to the internet. So you can imagine, I think they own something like 30% of the global firewall market. And I was responsible there on their mobile and cloud security portfolio, basically the transformational efforts around moving out from what you would see as traditional IT to the way that the world will look in the next, arguably today, but clearly as more and more companies adopt cloud and mobile for their workforce, for their IT. That was basically the solution set that we were bringing to market. That was essentially, say, the bulk of my career. And in 2017, something quite interesting happened. We were brought into investigation that happened in South Korea. Basically, 4 exchanges got hacked over there by what I think later we would attribute, another would attribute to the North Korean sort of nation state backed cyber teams. And they stole about 200 million worth of Bitcoin back in the days. Now, I guess it's worth somewhere around $10 billion. So pretty hefty price for their effort. Right. And that sort of opened our eyes in terms of the lack of infrastructure and the issues around sort of adopting those asset classes in a more secure and institutional way.
Yeah. And for people who don't know, Fireblocks services many of the largest players in the space today: Coinbase Pro, Gemini, Binance US, Compound, BlockFi. Just the other day, I was having a conversation with someone who worked at a smaller crypto organization who said to me, words to the effect of, and we use Fireblocks, so you know that the back end is secure. So for people who aren't familiar with the back end of the way these systems run, your organization is involved in many of the largest players in the space.
Yeah, so some of the players we basically provide the rails to, like you mentioned Coinbase, Gemini, and so on. And some of the players we provide both the rails and the wallet infrastructure, such as BlockFi and some of the other players in the space. And we currently serve close to 300, somewhere between, let's say, 280 to 300 players in the digital asset space on that front. And the way that people think about the infrastructure there is that they usually have, I would say, 3 problems that they need to solve, right, from an infrastructure. One is the wallet aspect or the custody aspect, depending how you define exactly the problem. But essentially creating those wallets or accounts and managing securely the private key behind those accounts to either hold your own coins or your own assets or hold the assets of your customers. So that's basically problem number one. People usually define it as the custody problem. We usually like to call it more the wallet or the storage problem. But that's really the private key. Then the second
I'm
is,
curious actually about the distinction between those two nomenclatures. Why do you tend to call it the wallet problem while others call it the custody problem?
um, I think custody is clearly a word that is borrowed from the traditional space, because in the traditional space you have custodians such as Bank of New York Mellon, State Street, and pretty much all the big major banks. But in some ways, this terminology or is not one-to-one transferable to the digital space, in a sense that in the old world, custodian somewhat means that, as we move from the point in which you had sort of gold in safes, right, to the world that basically what those custodians actually do is that they have digital records of the different balances, right, of the users. One would argue that basically that sort of function is actually fulfilled by the blockchain, right? Because what actually holds the different, what basically holds the different account information and how much every person owns is reflected in the Bitcoin ledger itself, right? One would argue that maybe the custodian, the real custodian, is the ledger. Then effectively what you're custodizing as a custodian or as a wallet provider or someone basically provides the service is the private key, right? So it's basically the password to instruct a transfer, which is different than basically being the holder of the actual balances, right? So when people sort of refer to that, you're the custodian because you hold my private key. Well, it's sort of like calling, if you're using Citibank and you have using one password to hold your login credentials to your Citibank, it's basically calling one password as your custodian, right? It's not really your custodian. That's basically what makes sure that you have the access to your assets. I mean, clearly, when you're holding it with someone like Citibank or you're holding it with Bank of New York Mellon, there are many layers that allows you to recourse, and your credentials to the online banking is not effectively equivalent also to the private key. But the way that we look at it is that you really sort of securing the credential to instruct a transfer from a specific account while the account details are on the blockchain.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.